Hello friends, welcome back. So in this lecture we'll understand Magdy indicator, its moving averages, conversion and diversion, and let us plot Magdy on our graph now. So we go to indicators and we type Magdy. Here it is. So we just type Magdy and you take Magdy, and there now on this graph you have Magdy plotted and you have RSI plotted. Now how does Magdy work? So Magdy is nothing but two moving averages, which is this two, the blue line and the orange line. On some platforms this shows as the red line, and one line, when the blue line crosses over the red line, the price follows the blue line. So basically you see that the blue line has crossed the orange line and it went downwards, and this is where the price fell. Correct? So this is where the price fell. Now Magdy is we call it a bit lazy indicator or the confirmation indicator. That means it actually confirms after a while that yes, the price change did happen, right? So it went down and we say, okay, Magdy lines have crossed now, hence the price is definitely going to fall. So at this point we do not know where the price is going, and then it's going up, right? And at this very point you can see that RSI is coming down, and after RSI came down, which is here, so RSI came down here, at this point you see that Magdy has not crossed yet, right? So that is why we call it lazy. It crosses after a while, thus confirming the direction, right? So it's called confirmation indicator, where it confirms the direction after a while, right? And once this crosses, you know price will then fall, and at this point Magdy has crossed again, so you know that the price will now go up. So you see at this point it actually crossed, and from here the price went up again. All right, and then they went parallel for a while. This shows indecisiveness of the market. The market is not decided, and then price follows the blue line, and the blue line went down again, and the price also went down again here, right? So this is how you understand Magdy, and these two regions of the Magdy are showing you that overall the market is bullish or bearish. So you can see this centerpiece line here, and then you have bars above the center line and below the center line, a histogram basically, and the bars above means the market is going to be bullish and this is bearish, right? But that is not what we are actually looking at using Magdy. What we are looking at is we use the indicators together. So when here RSI starts moving up, I want Magdy to confirm the direction. So after a while you see that Magdy also crosses over and confirms that the blue line has crossed the orange line upwards, so the price is going to go up, and then from there for quite a while price does go up, right? So if we look at this and put a trade somewhere here, we will actually make a profit on our long trade. Now what happens is that because we do not want to just depend on one indicator, we use a few of them together and to affirm us the direction. All right, so that explains Magdy. Now you notice that for RSI and Magdy I am not changing the default parameters. For example, for Magdy usually the default parameters are 926. That means one of them is a 9-day moving average and one is 26. So here is 12 and 26. So one of them is a 12-day moving average, one is 26, right? So we just go with the default parameters. All right, so that is Magdy. Now let's look at another indicator in the next lecture.